Evening, everyone. Again, thank you so much for joining us today. My name is Cal. I'm the mortgage sales manager here at Ideal Credit Union. Really taking your time out of your busy day to join us. We really appreciate that. So I've got Rachel Scarrella with me here. She is one of our trusted partners that we work with. And we've been working together for over 10 years now, actually. So today we're here to talk about navigating that home buying journey in 2025. It's crazy to say that it's already September, so 2025 is starting to end already. But we all know this market is constantly changing, and so hoping that we can shed some light as to what the market's been doing, how it's been doing all year, um, and maybe help you guys get into your own home. And so, couple quick housekeeping items before we get started here. I'm sure you saw we do have the webinar being recorded, so we'll get a copy of this sent over to you after the session. Number two, the webinar is scheduled to go for about an hour and a half, so until 7:30. And again, we want to be cognizant of your time. And so if we end early, we will open it up to questions. And then the third thing, of course, is we do have the Q&A chat box open. So the function's available. If you have any questions, please go ahead and type that in there, and either Rachel or myself will get to you as soon as we can. So let me just make sure that's popped up here too. Awesome. Perfect. All right. Well, like I said, we'll go ahead and get to it. And perfect. So this is me. Again, my name is Cal, pronounced just like the animal. I've been with Ideal Credit Union for 8 years now. I'm the mortgage sales manager, including myself. We have 3 loan officers here with probably over 30 years of experience in the mortgage industry. And so super excited. A big part of my job that I love the most is educating and getting my borrowers prepared to buy a home. And so outside of work, I have 4 girls, and so that's between sports and walking and fishing and hiking. I mean, that's really where my time comes in. And so 2025's challenges right now, I'm going to dive in because I think it's really interesting to kind of see here. So the number one big thing that we have going on right now is elevated mortgage interest rates, of course, and then that's really impacting affordability for a lot of our borrowers. Because obviously, if the rates are high, you're not going to be able to qualify for as much house, right? So if rates come down, you'll be able to qualify for more house, so a higher purchase price. The second thing is housing inventory. And so Rachel's the expert with this, so she'll chime in once her slide is up here. But inventory's been kind of tough. Not a lot of houses in the market. We are seeing an increase though, so that's really promising to see. And then last but not least, borrower education and preparedness. So with the number of borrowers that I do meet and my team does meet, I mean, I think it's important to know what's out there, the different types of programs, what you're approved for and why, because the more that you can, again, equip yourself with the knowledge, the better position you'll be. So the question is, right, how does interest rates really impact you? Interest rates impact your mortgage payments, which in turn impacts your purchasing power, which in turn impacts affordability. And of course, if it's a higher and elevated interest rate environment, you're going to pay more interest over the life of the loan. And I want to show you this in the next slide here, but an example would be like if rates were 7%. Actually, you know what? We're going to get into it. So mortgage rates. Oh, this is kind of hard to see, so I apologize. Mortgage rates at the beginning of the year, I always like to kind of show this, was at 7%. And fast forward to September 18th, so just last week when I kind of updated the PowerPoint, rates came down to about 6%. So that's a 100 basis point swing, which is great to see, right? And so you're like, okay, what about mortgage rates? Why does it matter? Why does it matter so much? And so this next slide, I'll kind of show you. So at the beginning of the year, if you were pre-approved for 450,000, right? Because of rates coming down, you are now qualified for 500,000. So it's a $50,000 purchase price swing. And so a lot of the buyers right now are kind of seeing this as a great advantage to really take advantage, get ahead of the market. And so you can see here, hopefully you guys can see I might have a laser pointer here. Mortgage from January of 2025, your payment's at about $3,000. And assuming you pay mortgage for 30 years, the minimum payments, you're paying about $627,000. Fast forward to the market now, $500,000, what you would be approved for at the 6% rate. Payments are about the same. So again, that's why I said affordability has gone up. Payments are about the same. But look at this. You're approved for more, and yet you pay less interest. So how enticing is that, right? You're going to pay $521,000 over 30 years. So in turn, you're saving the $106,000. So I always like to kind of show this. There's a couple, depends on how you look at it. If it's a glass half full or a glass half empty. And so super exciting for us to see rates starting to come down. And we're hoping that it continues to trend that way. There's opportunities in the market. And I think that's also a really great time right now. And it's always a great time to buy, I guess, in my book. And so I think what you have to really focus on now is with home values kind of continuing to, steadily climb, really focus on that long-term investment, right? Like if you're buying the house now and you're paying the mortgage off, you're going to create and build equity for yourself. And I had this conversation with one of the uh, borrowers that I helped with like 2 years ago, and she was like, I bought the house, I didn't like it, but I'm like, think about it. It's been 2 years, and you've probably paid like $30,000 towards the house, and now you've got this investment. She's like, yeah, but I didn't even really love it. I just bought it because I needed somewhere to stay. And I'm like, but that's okay. But look at where we are now. Imagine if you were renting. She was paying $2,000 for rent. Like $2,000 over 2 years. I mean, she would have just paid someone else's mortgage, $24,000, right? And so I think it's important to really focus on that long-term investment. Opportunities in the market right now. Rachel's going to speak on this too, but you can negotiate better deals. We're seeing a lot of our borrowers come in with seller paid closing costs, which is huge, right? Because if the house is in the market for a little bit longer, the sellers are more willing to negotiate and talk with you about the price and maybe even bring the price down. So um, other opportunities right here, exploring alternative financing. We've got this year and last year alone, a lot of people are looking at adjustable rate mortgages because what it does is it offers you a lower interest rate, which means a lower payment for like the first 5, 7, or 10 years, depending on what you like, which option you want. And so they're liking that option because they're thinking and anticipating that rates could possibly come down. We've got zero down programs, and down payment assistance. So if you need funds for closing, we've got those available for you as well, and we can dive into those products a little bit later. But super excited for both of those programs as well. And number 4 is, of course, if mortgage rates do come down, capitalize on the refinance. We've had people who actually just bought homes last year and had like that 7.5 interest rate come back and refinance a year later. There's no limit to refinancing. The big downfall, of course, is you have to pay closing costs again, but that can really be rolled into the loan so that you don't have to pay that upfront. And so again, really great to come in and see if it makes sense for you, because the worst thing that can happen is we say it doesn't make sense at all right now. And so again, some really great opportunities in today's housing market. The one thing that I do feel like we have the most control over with is education and preparedness. I think this is really, really important. Again, first thing I always recommend to anyone that might even be thinking of buying a house is come in and meet with one of our loan officers for free. That's right, free. So we meet with you. We set up a game plan, if you will, before you look at houses, because house hunting is fun. Don't get me wrong. I that's the first thing I think of when I think of buying a house. You don't think about financing something for 30 years, right? Um, but when you meet with a loan officer, what we do is we determine, number one, what's your timeline? Are you trying to buy tomorrow? Are you trying to buy within a year, 2 years? We talk about figuring out what your financial goals are, whether that's affordable payments or whether it's, hey, I want to be approved as high as you can approve me for. Um, we also talk about understanding credit. Again, one of those big topics that everyone, we hear about, and no one really tries. There's a lot of financial education out there regarding credit. And so we talk about it very high level and figure out ways. So if you don't have any credit, again, it normally takes about 2 years to get a really good solid credit score. But again, that's why you meet with your loan officer to kind of figure that out. Number four is also important. Figure out the requirements, right? What do lenders actually look at when they're trying to get you pre-approved for a house? And I can tell you it's very basic. Income, credit, assets. Those are the big three things we look at. And so number five, the different types of mortgages, different types of programs, different types of down payments assistance. Like there's a lot out there. Like you can probably Google it and you'll get a vast amount of information. But again, those certain programs apply to certain cities, apply to certain counties. So it's a lot to kind of go over when you're, again, just Googling it. So and number six, the most important thing of all, building trust and communication. You are not, buying a toaster. It's a commitment. It's a 30-year commitment to this mortgage, and it's probably going to be one of the biggest loans that you'll have out there. And so building trust with your loan officer, building trust with your realtor, those are going to be so crucial. And they're going to be your best friends when you're going through and trying to find that perfect house for you. So let's get into this. So why, right? So your timeline, I think this is a big part of it. So why are you buying a home? And I can give you an example of why I'm buying a house. So I personally loved renting. I rented for 8 years, and the landlord never rosy rented me because he said I was a good tenant. I paid on time, and um, it was a great situation. $800 for 8 years. Who wouldn't want to do that? So but what ended up happening, as I was telling you before, I have four girls, right? So my two older ones who are now 10 and 8. We had our girls in an apartment, and I realized they were starting school, and I'm like, oh no, I gotta make sure that I get into a house to get them into the right school district. That was what's important to me. So that's what prompted me to get up and say, okay, I should probably start looking for a house to buy a home. Um, and I used Rachel. Rachel again was fantastic, and she helped me and see so many different houses. And um, that's the reason why I bought a house. But these are a few of the reasons that my members have told me of why they bought a house. Which again, I think you got to figure out your why. Number one, really to have a place for yourself and future generations to call home. That's really important. Generational wealth is a big thing. I want to leave something for my kids too if I ever, were to pass. Ideally free and clear, so a paid off home. So number two, really control decisions about your home and the land around it. My wife loves to garden, and so we couldn't garden at the apartment. We got a little pot by the window, and that wasn't enough. So we bought a house with a little bit of land, and it was nice. Like she could garden and kind of do what she wanted and go spend time outside. Um, Number three is be the first member of your family to own a home. Um, this is a very exciting thing, but just so you know, if you're the first member of your family to own a home, the upcoming holidays for the next 2 years is probably going to happen at your place. So a lot of people like to build equity for themselves, right? I have friends and family that buy duplexes. They live in one half, they rent out the other half. They're like, well, why not? Like they're paying my mortgage for me, or at least part of my mortgage, and so they want to be landlords. Which kudos to them. That's fantastic. Um, and then last but not least, having stable payments. I was fortunate enough to have again a stable payment for 8 years. But in this day and age, that's not the case. It seems like every year rent does go up. So we also, when we're meeting with you, determine your financial goals, right? Really determine why you're trying to buy a house, the purpose. If you already own a home, are you trying to upsize or downsize? Maybe you want a vacation home. Like maybe you want to buy a second home, on a lake up north in Minnesota, and turn it into Airbnb. Who knows? But we, again, help you determine that. Figure out where your ideal location is. Do you want to commute an hour if you buy a house an hour up north to work every single day? Location is really key when it comes to real estate and again, convenience for you. What type of home are you looking to buy? So there's I want to say four big main types. Single family is kind of the one that you see out, it's just a standalone home. Standalone home, you own the house and you own the land around it. There's condos, which is usually a unit within a building that's multiple floors. You pay an association fee. You own only the unit in that building. There's townhomes where it could be side by side. You're connected with a wall, or it could be like a standalone one. But you have a house there, and you have an association that takes care of the maintenance and stuff on the outside. Um, and then last but not least, we've got a multi-unit home, which could be like a duplex, a triplex, a fourplex that you live in one part, and then you can rent out the other 2 to 3 units to 4 units. So we figure out your long-term goal, right? I bought my house. I'm thinking, oh, this is a starter home for me. I want to eventually upgrade. Maybe the kids grow up and they get out. Maybe want to upgrade. So figure out what your long-term goal is. That's again very important to you and to us. And so these last two items kind of go hand in hand of what's an affordable payment for you, what's a realistic payment based upon your finances, and then what's a maximum payment that you would feel comfortable with. So I have a lot of members that do come in. They're like, "What's the maximum I'd qualify for?" And I would be like, $900,000. They're like, "Wow, that's a lot." I'm like, "Yeah, but your payments are gonna be like $6,000 to $7,000." And that payment shock is like, "Well, I don't want that." And I'm like, I get it. I'm telling you how it is, right? Like, I just want to show you that you don't want to get qualified for the maximum amount. Normally, you want your payments to be about 30 to 35% of your actual income that you take home every month, to allow yourself some wiggle room, in the event of emergencies or needing new vehicles or you name it. And so, again, I think it's figuring out what payment you're comfortable with. So, but I also have the opposite where members come in, they're like, I want a mortgage for $1,000, and I tell them, I'm like, well, realistically, that's maybe like a loan for $50,000 or 100,000. And they don't like that answer either. But I think it's figuring out, what's a good medium for you. Number three, so we've determined, the why you want to buy a home, the finances, and now we got to talk about credit. So credit is pretty much a universal way. They've tried to streamline it as much as possible to determine if the people who are applying for loans are trustworthy and will pay back the loan. That's really what it comes down to. So credit score ranges anywhere between 300 to all the way up to 850. So the highest credit score I've ever seen was an 847, and that was with someone with 40 years of credit experience. Um, but to qualify for a mortgage, the minimum credit score is 620. So there are different programs out there, and so sometimes the lowest I've seen them approve the credit score for a mortgage is 580. But again, it's very specific programs, and so credit matters because, again, it helps build your financial reputation. It helps establish that you're a trustworthy borrower, that you pay your bills back on time, and you don't really owe any debt to anyone. So you can leverage great scores to get better deals. And then it really shows the lender that you can handle paying back creditors. And so having a good mix is really important, which is probably the next slide. Yeah, there it is. So credit score consists of 5 big categories, right? The number one is payment history. So if you miss one payment, I've seen it where I had a member miss a payment and it dropped the score over 100 points. They'd been making payments 100% all the time, but they missed one payment and it dropped them 100 points. So that's very significant. So payment history is 35% of your score. 30% of your score is the amount that you owe. And just coincidentally, usually what you want to do is when your statement from your credit card it cuts off or cuts over, you want to have a balance of 30% of what's available to you as the statement amount. The reason why I say that is because credit card companies, they only report to the bureau once a month. And so you could use your credit card today, pay it off tomorrow or the next day. It's going to show up as no activity because, again, the credit cards don't report that. So credit history is 15% of your score. A good credit history that we usually like to see for a mortgage loan is about 2 years. But I've gotten approvals for, again, 2 years of having credit history. It's not a very it's a stopping point. I mean, I've seen it where we approve loans with, up to a year of credit too. So, and then the other 10% is, this is kind of hard to see, but a credit mix. They always like to see that you have, a couple credit cards out there, maybe some personal loans, um, installment loans, like student loans. Just a good mix. Mortgages are a separate product as well. So having those out there helps. And then the other item is new credit. Are you going out there and applying for, 20 credit cards within like a 6-month time span? Because the more that you have your credit pulled, the more negatively it'll impact you. So some credit billing tips. I always like to, again, make sure you're consistently making the payments, right? Skipping a payment can knock off more than 100 points of your credit score. The one thing I will say is like credit card companies normally don't report a loan being late unless you're more than 30 days overdue. So keep that in mind. If your bill is due on the 30th and you pay it on the 15th of the following month, they're not going to report it, but they might charge you a fee for it. So, and I'd rather that than have them report it to the bureau. Know your credit limits and try not to charge more than 30% of that limit. Avoid closing accounts, especially like older accounts with higher credit limits, because again, credit history is a big, it's 15% of your credit score. So if you close your oldest account, that's unfortunately going to go away. So I've seen this as well. So if you can add yourself to like your spouse or significant other's older credit card, that can significantly improve your credit score too. But again, that's a conversation you want to have with them. So um, don't tell them that the guy from the webinar told you to add yourself on. Okay. Um, and then last but not least, utilize the free credit report monitoring. I think that's really important. One a year for free. I think there's a lot of tools out there that you can use from your credit card companies, but just making sure that there's no errors on there. There's no collection items that all of a sudden appear. Credit, again, can be affected. So like if you're co-signed or joint with someone else's, like you co-signed for like a family member's car loan, if they make a missed payment or if they miss a payment, it's going to impact you as well. And so, again, that one credit report a year really does help just to make sure that there's no unusual activity going on. So, what are the requirements? So, I talked briefly about this. We reviewed 3 big things, right? We've got income, we've got credit, and we've got asset. We've already talked about credit. So, credit score is pretty straightforward. We pull your credit report, everything kind of falls in, and we show exactly what your monthly minimum payments are for your loans. Assets are pretty easy. We verify your bank statements. So we would make sure that you have enough money for the down payment. But that's not a hard and set stone rule because, again, we've got zero down, we've got down payment assistance. And so the other big thing, I guess the main item we look at is what we call your debt to income ratio, right? So we look at the amount of monthly payments you have compared to the monthly income that you have. And so on the right-hand side here, I wanted to give you an example of how this looks like. We've got 2 borrowers making $60,000 a year, which is about $5,000 a month. So assuming that they have no debt, no car payment, no student loans, we typically like to see, so we allow approvals up to 45% of your income. So combined, they make 10,000, which means they could afford a mortgage for $4,500 a month. All right. So what we do is we work backwards. We figure out what a monthly payment will look like, and then we turn it and convert it into a purchase price. So in this scenario, this couple could afford a maximum home price of $600,000, assuming they put 3% of the money down, right? And this is again what the payment looks like. The 3 things that we always have to kind of guesstimate is house insurance right here, the property taxes, and then the mortgage insurance. And if we break this down, I think I'm going to go into a slide down further, but when you buy a house, you don't just pay the principal and interest. You got to pay for the insurance, which protects you in case of fires, hail, and whatnot. Property taxes are unfortunately non-negotiable, so you got to pay those every year. And then mortgage insurance, if you're putting less than 20% down, we require this insurance to cover us in case you were to default. And so mortgage insurance, if you have a really good credit score, it helps get you a better mortgage insurance rate premium. So this could be a lot lower than $200 if your credit score was really good. So again, the big thing, debt to income, that's what we figure out to qualify. Again, the other two are pretty straightforward. So, so we've talked about the requirements, and now we are going to be looking at the different loan programs that you might be eligible for. These are just a few of the programs we have here at Ideal. So the most common type of mortgage is a conventional loan. Again, it's just a regular loan that we lend out using the house as a collateral, right? Usually the down payment's between 3 to 5% on that. We've got an FHA loan, which is a government-backed loan. They're a little bit more flexible with qualifying. I was telling you before that conventional loans like to see or can approve you up to 45% of your income. FHA allows us to approve you up to 55% of your income. VA loans are for our veterans and families by helping them become homeowners, and that is probably one of the best programs out there because they can finance 100% of the purchase price. We offer, again, adjustable rate mortgages, what we call ARMS is acronym for it. We have a lot of acronyms in the mortgage industry, in the real estate industry. So these first numbers that you see here is what the rate is locked in for. And the second number is how frequent in years that the rate can change. So a lot of our members are liking this 10-1, right? So they lock in the loan for 10 years, they lock in the rate for 10 years, and then the rate can go up or down based on the market after 10 years. But they're like, 10 years, what's going to happen by then? We just don't know. And if rates come down, I'll just refinance. And worst case scenario, like the market's not going to be any higher, right? Or can't be any higher than it is now. So we offer a zero down program, which is what we like to call a wealth builder. It's a 25-year term that allows you to put no money down, but you build equity a lot faster. So normal terms for like the conventional FHA, VA, and ARMS are usually 30 years. And so, and then of course, last but not least, we offer community heroes programs as well. So for our nurses, our firefighters, police officers, doctors, you name it, we have programs that allow you to put as low as 1% down. And with again, a really good interest rate. And some of them even allow us to exclude student loan debt, which is awesome. So, but again, just a few programs out there. So when we meet with you, we'll kind of go through them. And if for example, if the VA loan doesn't apply to you, we won't tell you, we will probably just exclude that. And so down payment assistance program, super excited about this. We partnered up with Minnesota Housing Finance Agency last year. And so our most popular program right now with them is the deferred payment loan program, which is a no interest loan up to $18,000 that can be applied for down payment or closing costs. So you don't pay this back until you refinance the house or you pay off the loan after 30 years. So the biggest caveat for these two is that they're both income limit based. So like this one down here, you can't make more than $89,000 a year. And this one up here, the monthly payment loan, you can't make more than $142,000 a year. So, and for both of these programs, you do have to be first-time homebuyers, which means you can't have owned a property in the last 3 years. So this second one up here is the monthly payment loan. Think of this as a second, like a personal loan, if you will. It's a 10-year loan up to $18,000. So you'd be making two payments, one to your mortgage, and then the second one would be to this loan right here. And after 10 years, it gets paid off, and you don't have to worry about anything else there after that. So, all right. So we've gone through this. We've talked you through it. We haven't even done an application yet. So now that we're here, if you're like, hey, I'm ready to get pre-approved. I want to get the process started because I'm trying to buy a house. We get you pre-approved by submitting an application, which will consist of name, social security number, date of birth, all that good stuff. We'll gather income docs and asset documents. A lot of this is automated, which is awesome. You can actually pull up your employer directly from our website and then just upload your pay stubs that way, or we can just electronically verify it with your employer too. One thing I will note right here is we do have we only pull a soft credit pull. So that way, it doesn't ding your credit score and you don't get, 100 of those solicitation calls. And so super slick, again, soft pull, a lot of the scores are almost the same. And so that's a really nice tool that we have there. And then we review kind of, so now that we've got all these items here, we can review your personalized application and really figure out and really drive down what the payments are, what your qualified interest rate would be, closing costs, and then the cash that you're going to need for closing. And so everything that you tell us is true, then we're going to be able to get you approved for whatever we had talked about before. So we've talked about this already, monthly payment and closing costs. These are just a couple different components of your payments. Again, principal and interest is what goes towards the interest of the loan and towards the actual mortgage balance. Mortgage insurance is insurance that the lender has the borrowers pay to protect us in case you were to default. Um, Property taxes are paid twice a year in Minnesota, May and October, but those unfortunately are non-negotiables. And then homeowners insurance is also non-negotiable because being that we live in Minnesota, there's a lot of risk for hails or fire. I mean, a lot of casualties, and so these three items are something that again we guesstimate for you. And so if the property taxes that you buy, for example, if you bought in Wisconsin, the taxes are a lot lower, you'll qualify for a little bit more house. And then last but not least, homeowners association. If you're buying a condo or a townhome, remember that that's included as part of your debt and liabilities. So you might qualify for less home if you're trying to max out your debt to income ratio. So buying a house is not free. So there are closing costs that are charged to you at the time of closing, and so none of this is really paid up front. I take that back. Depending on who you go with, some lenders might have you pay for like the credit report up front or the appraisal fee up front. So at this time, we don't charge any of these fees up front. So what goes into closing costs? A lot of people save up money for the down payment, but closing costs will run between like 2 to 3% of the loan amount. So if you bought a house and we're just going to use bought a house for 100,000, your closing costs could be between like $2,000 to $3,000 on top of the down payment. So, and I'm more than happy to show all the details with you if you were interested in kind of digging a little bit further. Again, I always want to be transparent, and so we've got our origination fee. So that's the money that goes to the lender, the fee that goes to the lender for pretty much taking the risk to do the loan. We've got the appraisal fee, which assesses the home to make sure that it's worth what you're paying for. And then we've got the credit report fee. So like pulling your credit report costs money and we get charged, so we really pass it on to you. There are title company fees as well. Title company holds a really important role. So they're a third party company that makes sure that the recording of your house, the title of your house, is transferred correctly from the seller to you. Super important because again, you don't want to buy a house and be like, oh, looks like a mistake was made. I'm not really the owner anymore. So they have charges there with the title company. And then these last other items are really non-negotiable. Government recording fees, county, whatever county you're in, will charge you their recording fees because we got to record the mortgage with the county. And then there's prepaid for taxes and insurance as well. So again, insurance is we pay that at closing, and then property taxes again are paid twice a year for Minnesota. Some mortgage myths. Just wanted to kind of quick go over this too. I have a lot of borrowers that still come in thinking they have to put 20% down. That is very not true. We just talked about this. You could put as low as 3% down up to almost no money down, depending on the program. So you've got to keep your mortgage for a number of years. This is not true. So you got to, again, I've had members that just bought a home last year that are back to refinance because they're saving like $200 to $300 a month. And so you don't have to retain that mortgage for a number of years. Number three, buying is always a better financial deal than renting. I told you about my situation. Renting was great for 8 years. I loved it. It was fantastic. It worked great for me. So that's also not true. Um, but again, I live in a house now and I love it, so I wouldn't go back. So you don't need a house. Sorry, you don't need an agent to buy a house. I think your realtor partner is going to be your best friend. So they're going to be the ones that show you the houses. They're going to be the ones out there weeknights, weekends, and trying to get you the best deal when you're trying to make an offer on a house. And so there, again, I don't think that's true at all. You definitely need an agent to buy a house. Um, we see a lot of our buyers go and get a showing from the listing agent. So the realtor who lists the house, their best interest is for their sellers. So they don't really represent you. And so having a realtor like Rachel herself help you negotiate terms and deals, you can't go wrong there. And so a couple quick home buying tips. If you're pre-approved, right, and you're looking for a house, don't go out and apply for new credit. We do have a notification turned on. So if you got approved today and went and got a new car and your payments are $600, $700, that's going to impact how much you're qualified for. Continue to make your payments on time. I've seen, unfortunately, this has happened too, where they're pre-approved. Again, we do a soft pull at the beginning, and then we do a hard credit pull once we get the house and it's under contract. Then we do a pre-credit report, tri-merge report. And so keep making your bill payments on time. Moving around it will probably require more documents. A lot of the times our borrowers do think it's easier to just put all the money into one account so that they can transfer it at closing. It's great, it's convenient, but what happens is we have to document where all this money came from. So which means you have to provide the paper trail for it. And then last but not least, again, not very common, don't quit or change your job. If you quit your job, again, we qualified you based on you working, right? So if you don't work, we can't count any income. And then changing your job is okay. It might delay your closing, but if you're getting a promotion at work, that's absolutely okay. But if you're changing companies, then normally what we want to do is get a letter showing that what your new position is, what your offer is, and we usually want to get at least 30 days of pay stub. So that's why I said it could delay your closing. So. Awesome. So we've talked through a lot, right? So we've gone through the steps. We've met. You are now pre-approved. You're like, I want to buy a house. I got you pre-approved. You're trying to buy a $600,000 home now. So once you're pre-approved, your next step really is to reach out to your real estate agent so that they can help you narrow down your home search because there's wants, there's needs, and there's hey, I want this house. Like I need this bathtub to be nice and new and shiny. But again, that's where your realtor is going to be your best friend. And so this is at the point is when I refer you over to Rachel. And so, Rachel, I'm going to turn it over to you. If you guys have any questions, again, I don't see anything in the Q&A or the chat. And so.
Okay. All right. Hey, everybody. Hope you're having a good evening. My name's Rachel Scarrella. I am a realtor with Edina Realty. I've been licensed for a little over 19 years now. I've been with Edina Realty for 18 of the 19 years. I'm licensed in both Minnesota and Wisconsin, so I do cross over the border and hit Western Wisconsin as well. I have 3 kids. I'm married, and in my free time, I like travel, read, and I really, really, really love sports. So that's a little bit about me. So oh sweet, this works to click. Okay, I will first, before we jump into like the home buying process, I'll give you a little snippet of what we're seeing in the market right now. So, I hope you can see this graph okay, but I'll kind of go over these numbers a little bit. So what we're seeing right now, and this data was taken, it's published a month behind. So we get this data at the end of August, so we'll be getting a new batch come September, but it's pretty indicative of what we're seeing still right now. So new listings are up about 6%. And when we're comparing this, we're looking at this year compared to last year. So we're up about 6% with new listings. Active listings are up about 2%. The month supply of inventory has not changed much, and I'll talk about what that means. That's our absorption rate in a moment. Pending sales are up 4%. Median sales price is up about 3% from last year. But one of the statistics that I found kind of interesting was that 25% of the homes that are on the market right now have shown some sort of a price improvement or a price reduction. So what we're seeing is that homes, although they're not on the market too much longer, they're only on the market roughly 4 days longer than what we saw the year before, we're seeing places drop their price more quickly in order to entice people to make an offer. And I'll give you kind of like a full on what I think of the market here in a moment. But this is pending sales activity by month. So the reason I like this graph is it kind of shows our historic trends of what we're going to see. Being that we're moving into the fall, you can kind of see the peaks and the valleys that we see throughout the year. So obviously, spring market is kind of the hot market that everybody wants to be involved in. That's when we see the most homes on the market. We also see the most buyers on the market, or in the market, I should say. So as we come into late fall, into winter, you're going to see a dip in the market in terms of pending sales activity. Not as many people list their home in the dead of winter. Not as many buyers are out there. Now, if this is you and you're in the position where you want to be buying in the next 3 to 6 months, take advantage of that. I have found over the past that I find the best deals in the middle of the winter because number one, the sellers want to sell. They're not just testing the market. If they're actually listing their house in December, they really want to sell. And number two, you're going to be in less competition with buyers, other buyers out there. So our spring market kind of kicks off right after the Super Bowl, which yes, it's still cold. Yes, it's dreary, but that's when spring market starts in real estate. So just keep that in mind. As we move into winter and early spring next year of kind of what to expect in terms of pending sales activity and what that means for you. Okay, bear with me as I try to move that slide. Oops. Okay. Absorption rate, and we talked about this a moment ago. Absorption rate means how many months would it take to sell everything that's on the market in the current housing market that we're in. So all the inventory, how long would it take to sell? And right now we're at a 2.7 month supply of inventory. Now to put that in perspective, back in the peak of the pandemic when the housing market was crazy, we had less than a month supply of inventory. So that means everything could sell in a month. Now we're sitting at 2.7 months, and that's the same as it was last year. So we haven't seen too much of a shift with that. Now, what does that mean in terms of what we're seeing? So a seller's market would be anything with a 1 to 4 month supply of inventory. A balanced market would have 5 to 6 months supply, and a buyer's market would have over 7 months supply of inventory. So according to the absorption rate, we're still in a seller favored market, and we do still see that with what's happening out there. However, we've seen kind of a little bit of a shift over the past year. There, like Cal mentioned, there's a little bit more negotiating room that can be had. We are seeing some price reductions. So there are some promising tidbits that are showing that it's okay. You know, we're in a decent time to buy, and it's a good time to buy, is what I'm saying. But we haven't seen a buyer favored absorption rate probably in over a decade. So don't let the 2.7 month supply scare you because we've obviously increased our inventory level a lot. Also, what we're probably going to see is if the interest rates continue to come down, which who knows, but if they do come down a little bit, all of the people that have been rate locked, meaning they purchased their home 4 or 5 years ago and they have a very low interest rate, they're rate locked. They don't want to move, even though they may have to move because their interest rate is so low. So what we might see is if the rates still start to come down a bit, those people will be ready to move and we might see a flood of inventory. So that might change the market dramatically as we move into early next year. But we shall see. Nobody knows. Real estate's kind of a crazy thing. Okay, so what is the role of a realtor? So I would break down my role into 2 main parts: education, representation. We'll talk about all these bullet points, obviously, but education is huge. So congrats to you guys for educating yourself tonight. This is a lot of times what we do when I sit down and have a buyer consult. We'll talk about what to expect in the process, kind of what their timeline looks like. All the things that you're doing tonight is something that you would potentially find when you do a buyer consult with a realtor. And that can happen well before you're ready to buy a home. There are times that I will meet with people 12 to 16 to 18 months before they're ready to buy, and it's never too early to get educated on what to expect in the process. This is the biggest purchase you will likely make, so you want to be informed as you go through. So our job is to educate you not only on the process, but also the market knowledge and market conditions. So being that we do this day in and day out, we are able to see kind of the trends of the market and the fluctuations that we see. And that's very valuable, I think, for you as a buyer when you're looking to buy. You want an agent who's doing this full time so that they can tell you, hey, look, I've noticed in the past 2 weeks that my listings aren't getting a ton of showings. We may be able to negotiate more on this house if we're going to go look at it. So again, market knowledge is a huge facet. that your realtor is going to offer you. They're going to show you properties that are right for you. So it is my job to ask you, what are you looking for? What's important to you? And then we're going to turn and put that in and find you, based on what you tell me, houses that fit your needs. It isn't my job to be like, no, I think you should look at this neighborhood because of that, or you should check this price point out because you're going to have a better kitchen. We should listen to what you want and be able to tailor the search to your needs to find a right fit for you. A big part of our job is also negotiating, and that starts, from the beginning of a purchase agreement through accepted offer, and then thereon it can happen during inspection and appraisal. So your agent's going to negotiate on your behalf. Obviously, it's our job to also guide you from start to finish, recommend professionals. So being that, a lot of us have been doing this for a while, if you needed an inspector or a rate of mitigation company, insurance agent, your realtor should have a good list of contacts for you, being that they hopefully have been doing this for a while. Community information, something that your realtor can provide. We have to be very careful because of fair housing. There's certain things that we can't tell you. Like if you say, hey, Rachel, are there a lot of kids in this neighborhood? I can point you in the direction of maybe driving by in the evening and checking it out, but we can't give you some information. We can give you information about school districts, parks, that type of thing. Networking is also a pretty big part of our role. And I find that this is valuable when we can find things off market for our clients. So being that we've been in, kind of a seller crazy market the past few years, it's been really great if we've found homes that are not on the market for our buyers to look at. And that's a big part of networking. So having a realtor that is networking behind the scenes for you is going to be a huge asset for you. And again, it's our job just to work for you. When you enter into a buyer contract, you are hiring that agent to work on your behalf. Right. Please pop in any questions that you have, because I can get going and talk rather quickly. So I apologize. A couple home buying myths that are pretty common out there. Number one, we've heard this, that if I have a couple different agents looking for me, I am going to find a house more quickly, or I'll have access to more inventory. And that is simply not true. When we list a property on MLS, it goes out to all the real estate sites. Likewise, when I list a property, or when Remax, we're all listing it on the same platform. It's all going on Northstar MLS, and from there it's filtered out. So having more than one agent looking for you isn't going to help you find a property more quickly, because we all have access to the same inventory. You also, and we'll talk about this as we get in, there's some rule changes last August, not a month ago, but last year. And you have to have either a buyer rep signed in order to view a property with a realtor, or a one-time showing contract. So you wouldn't probably have or you can't legally have multiple buyer reps with different agents. And then another common misconception, and Cal did hit this, is that if you go to the listing agent, you're going to save money. 99.99% of the time, this is not true. When the seller lists a property, they're putting in their designated commissions amount, and that's not going to change whether there's one or two agents typically. So by cutting out a buyer's agent, you're not going to save that 2.7% or whatever the buyer broker payout is. It's just going to go to the listing company. And then the other common thing that the other important thing I should say that Cal mentioned is that the listing agent is contractually representing the seller only. So they cannot give you advice. They cannot, help you negotiate a better deal. They can be a middleman, and that is about it. So you may lose a lot of money by not having somebody represent you and looking out for your best interest. All right. This is kind of the home buying process at a glance from the real estate side of things, and we'll touch on each of these as we go through here. So step one could also very easily be step two, which we'll talk about in a second, is to choose a realtor. So get a referral. Please don't just call a for sale sign and think that that's who you should go with. Get a referral. It's going to be the biggest purchase of your life, and it should be fun. So ask family, ask friends, ask the credit union, who do you recommend and why? Do research on them. There's so much information out there right now in terms of like Zillow reviews and social media and stuff like that. So do a little research and check out who they are, and then interview them. Ask them questions about, first of all, I think the most important is, are you a full-time realtor? You want to have a full-time realtor for a number of reasons. Number one, you don't want somebody that has a 9-to-5 job that would potentially only be answering your calls and emails when they're off their other job. So having full-time is important, that they can work around your schedule. For instance, my schedule is Monday through Sunday, every day of the week, and it depends on my clients. I work around their schedules, but evenings and weekends are a huge part of it. So you're going to want somebody that's going to be able to work with you on your schedule. full-time agents are going to be doing this day in and day out, and they're going to be seeing the market trends. Therefore, they're going to give you more valuable market knowledge. So I think it's very important to have that on your side. I don't think it's super important to know how many homes have you sold, but you probably want to know if they have experience. And if there's nothing wrong with being new, we've all started, but if they are new in the industry, make sure that they have people behind them that they can go to if they need help. Again, you don't want something messed up on your contract or your inspection contingency or something because it's a brand new agent helping you out. And everybody knows somebody. We all have family and friends, and I have family and friends who, everybody knows a realtor. So just because you know them, it doesn't mean you shouldn't ask these questions. So ask these questions before you sign a contract to work with them. Another common one, and there's no right or wrong answer, but is it a team that they're on, or are they part of a team? Are they head of the team? And then how will that team structure affect you as a buyer? So if you are interviewing an agent, I think it's important to ask, are you going to be my point of contact, or will I be working with somebody else on your team? Is that okay with you? So just know who you're going to be working with so that there's no confusion. And also I would ask the communication style. So make sure it fits with what you want, and make your communication style known to them. If you would prefer to talk on the phone, please let them know that. I mean, not everybody's the same. So you want to be upfront about your needs throughout the process as well. Now, once you pick an agent, make sure, first of all, that you click with them. You're going to be spending a lot of time with them. And you're going to want it to be fun, and you're going to want to like them. So make sure you click with them and then commit to that one agent. As I alluded to before, laws changed last year, and buyer rep agreements are mandatory unless you have a one-time showing contract, which means if I'm going to show you this house, I'm going to sign this form saying I'm going to let you into this house, but that's it. I don't owe you any fiduciary duties. So some agents will do that one time, and then they will require a buyer rep agreement from there. So that's another question that you could ask the agent when you're interviewing, is what's your process for these forms? Step 2, which could easily be step 1, is to get pre-approved. I'm not really going to dive into this too much because Cal did a fantastic job explaining all of that. What I will say is, before you do any shopping, you're going to want to have this done. Number 1, you need to know what your budget is, what you're comfortable spending before we can even set you up on a home search. So you're going to want to be pre-approved, have your numbers ready so that when you sit down and go over your needs and wants, which we'll talk about, you can say, hey, look, Rachel, I'm only comfortable up to this amount, because that's going to affect how we search for your home. So you want to have your pre-approval ready for that. Also, if you find a house that you like, you're going to need your pre-approval letter in order to make an offer. So that's a non-negotiable there. So I would say getting pre-approved is pretty high up there on the list when you start the process. All right, so you've gotten pre-approved, you have chosen a realtor. What I now do with my clients is we're going to talk through what's important to you. Let's talk about your search and get this all set for you online and get you ready to roll on the passive side of things for searching. And again, this can happen well before you're ready to buy. If you sit down with a realtor and decide you want to buy next year, you certainly can get set up on a home search and talk about your needs and wants. You don't necessarily need to have your pre-approval at all in order to do this. You should probably have an idea of your budget. But the passive searching part, you do not need a pre-approval letter for. But what I'm going to ask you is, what areas do you want to be in? Are we driven by location to work? Is school district a factor that we're searching for? So we're going to put in these criteria: the locations that you would like, the highest that you'd want to spend on your purchase price, and then we leave it as general as possible when we're setting up the search. So bed number criteria, bath number criteria, garage square footage. And personally, I like to leave it general so I'm not losing anything. Now, obviously, I want to know what your exact wants are. So we take your needs list, and that's what we're plugging into the One Home portal. But then I want to know, what do you want? So that if I'm looking on the back end of things and I am networking on the side, I can say, like, hey, look, Jim wants a house that has a fenced yard and a deck. Okay, great. I can start searching for that. We don't necessarily want to put that into the home search, though, because that could eliminate a lot of possibilities for you. So you're going to refine your focus, give that information to your realtor, and they're going to set you up on the One Home portal. Before we talk about that, let's talk about online home search and accuracy versus inaccuracy. There are a lot of consumer-friendly sites out there that you can search on. Zillow, as a realtor, is my worst enemy because it is so inaccurate. There are so many homes that you may find on Zillow that have been sold or off market for months, but they still say they're active. So when you're searching on any of those national sites, just be wary that it might not be an accurate representation of what's available. So you would want your realtor to set you up on the One Home portal, like I mentioned, getting that criteria and setting that up for you. The One Home portal is MLS, so not the MLS Online, which is a real estate company, but North Star MLS is the site where all of us put the properties. for sale, and then they filter out to every other site from there. So your realtor will set you up most likely on the One Home portal from MLS. And that's where, again, where we take kind of those general criteria, we plug them in, it populates a list of homes like this. This is a very old shot, so it's much better looking than this now. But it'll just, based on what we put in, it's going to pop out a list of homes that are available right this second for you. And then from there, I always tell my clients, let's go through you go through passively and search on there and tell me what you like, what you don't like. There's a little note section that you can take notes about what you like and don't like. And then from there, when you kind of have your list, then it's time for us to start viewing properties. The most common way that you will view a property is to do a private showing, which your realtor will coordinate on your behalf. So let's say we've got you set up on the home search and you say, hey, Rachel, I've got 5 homes that I really like. I'm going to set them up and I'm going to coordinate with the listing company. We would go view these properties. Sometimes a showing can take 5 minutes. You walk in and you say, this isn't for me, we're out. Sometimes it can take 30 to 45 minutes, depending on how much interest you have in the property. The max that we can set up for most homes is an hour for property. Now, it's very rare that we're there the full hour, but if you needed that full hour, we would have that. There may or may not, depending on how the sellers have it set up, be it overlapping showings at that time. However, it has to be privately scheduled from the realtors. So it's not an open house. An open house is different, and that is another way that you could view properties. Let's say you're just, get your feet wet and you want to check out some homes, but you don't want to go through the process quite yet. Hop into some open houses. So you'll see, open 11 to 12 on Sunday. You can go into that. You do not need a realtor with you. You really don't need anything. It's your chance to just go, look at these homes with no obligation and no pressure. Now, if you are working with a realtor, I would tell your realtor, hey, look, Rachel, or whoever you're working with, I'm going to go check out these open houses. That gives your realtor an opportunity to be able to look and tell you if there's any notes that you should, we see different notes on our end than what you, the public, see. So we can check it out and see if there's any red flags or anything that we need to let you be aware of. When you go to the open house, if you have a realtor, let them know, hey, here's my realtor. This allows them to be able to pass some pertinent information on, like if there's multiple offers or something like that, to your realtor. Second showing's exactly like it sounds. Let's say we went and saw 10 homes. You love one super more than everything else. Then we're going to go back and see it a second time. We have more time now in the market to do that. A couple of years ago, we didn't have any time at all. So we'd see the house and you have to decide within a few minutes if you want to make an offer. So times have changed. Okay, so let's say you have done everything, you find the house you want. Now it's time to make an offer. So in Minnesota, that's called a purchase agreement. So we're writing a purchase agreement. Now this process will look different depending on what's happening with the house that you have interest in. Now, there are still multiple offers that are happening right now. So we have a good idea, once we've seen the property, if it's a brand new listing and the agent says, I'm going to let showings go all weekend, and then an offer comes in and then they call for highest and best, then it's a multiple offer situation. We're going to approach that differently than if a property has been sitting on the market for 45 days and has no offers in hand. So your realtor will discuss with you what's happening with that specific home to help you generate a game plan for making an offer. A couple points. With multiple offers, we don't know what the other offers are for. We just know that they do have other offers. So most of the time, that means that the property is going to go above list price. Now, I tell people this too when we're searching, like if you tell me my top that I want to spend is $350 and a property is listed at $350 and it goes into multiple offers, or we see that it has the highest and best, it's very rare that you're going to get it for that. And we wouldn't want you to push your budget. So just keep that in mind when you're searching. But with multiple offers, you would make what's called your highest and best offer. We submit it to the listing company by their deadline. The realtor that represents the seller would be reviewing these offers with them, and then they would pick one. They don't really negotiate back and forth with all the offers. Once in a while, you'll see where maybe they love an offer, but their close date, it doesn't work. Maybe they'll try to change that close date with that buyer. But you don't really get another opportunity to change your offer. So what I say with multiple offers, give it your best shot so that if they select your offer, you don't have buyer's remorse, and you also don't feel bad if you lose because you left a little money off the table. So that's the best advice I can give you with multiples right now. Obviously, every situation is different, and you'll want to go through that with your realtor. But when we make an offer, a purchase agreement in Minnesota, what we're putting on that offer is we're designating your offer amount. We're going to put on there earnest money. So earnest money is a small chunk of your down payment. Average earnest money or typical earnest money in Minnesota is 1%. We will designate that amount on the purchase agreement. Now, earnest money is given to the listing company within 48 hours of an accepted offer. Now, that money would be refunded if you were to back out due to any of your contingencies. If you decided to just walk away from the transaction post contingency, then you potentially, most likely, would have to forfeit your earnest money, or they would have legal grounds to go after you for that earnest money. If you move forward post inspection and appraisal goes well and everything, then your earnest money is applied towards your cash to close or your down payment. So we're going to put on their purchase price, earnest money amount, closing date. Normal would be 30 to 45 day range for closing date. This is very negotiable depending on what you as a buyer want and what the sellers want. But if you're asking for average, 30 to 45 days. So we're going to designate the closing date on the purchase agreement, and we're going to list off or have a contingency addendum or a contingency in the offer for, let's say, your inspection. That's the most common type of contingency. We will also have a personal property agreement that talks about the appliances and any other personal property that we would be negotiating with the sale. Now, drafting and submitting the offer does not mean you have an accepted offer. So a fully executed offer is when we have signed docs back from the listing company. And that's when it's considered fully accepted. And if we have a contingency in Minnesota, that would be day 0 on the contingencies. Okay, so negotiation, obviously everything's negotiable on a purchase agreement. So you could negotiate the price, you could negotiate the closing date, everything's negotiable. And it's not, like I said, fully executed until they've given back signed documents. So once you have an accepted offer, then your contingency window starts if you're doing an inspection, and I would highly recommend doing an inspection. Average is, anywhere from that 5 to 10 day mark, 7 being kind of most common that we see. If you're in a multiple offer situation, you might want to shorten your inspection contingency a little bit. That sweetens your offer a tad. During this window of opportunity, during your inspection contingency, it is your time to do your due diligence on the property. So if you don't know of an inspector, which not many people do, get a referral from your realtor, ask your family and friends who they've used. It's very important to hire somebody that's, trustworthy, that's going to do a really thorough job for you. And during the inspection contingency, everything has to be done within that window. So if we have a 7-day window, by 11:59 p.m. on the last day of the inspection contingency, you either have to have everything negotiated. If you don't feel comfortable, you have to have canceled the purchase agreement, or you have to feel comfortable moving forward, because at 12 o'clock on the dot the next day, there are no more contingencies, and contractually you're bound to move forward with the transaction. So it's very important, and your realtor should be doing this to keep up on what time frame you're looking at and stuff like that. But during this inspection contingency, again, general home inspection is the most common. If you are buying in a rural area, you have a separate contingency, which would be for your well septic if they have those services on the property instead of city water, city sewer. And typically the seller will pay for those tests and inspections. But there's a couple common add-ons that we see in our inspection contingencies or with our inspections now, and one would be radon testing. So if there's not a radon mitigation system in the house, talk to your realtor and see if that's something that you want to add on. It's $185 to $200, and it's well worth it, because if there is high radon levels, it costs a couple thousand to mitigate. So it's kind of worth that. We want to see that number come in below 4.0, and that's a 48-hour test. So again, your realtor will know this stuff, but you want to keep that in mind during your contingency to get that set up so that you have enough time for that. Another very common, depending on the age of your home, another common add-on would be sewer scope. So if you're buying, in Minneapolis or St. Paul, or an area where, potentially has older sewer lines, that is a very important add-on for your inspection. I have not seen a very inexpensive sewer issue in my career. Most of the time when we're seeing them, they're thousands or $10,000. So getting a sewer scope where they, go in with a camera and check it out, it's going to be really important if you think the age of your lines are older. So again, you have your inspection contingency period. Any and all negotiations have to be taken care of during that time frame. Otherwise, you're moving forward with the home if you don't cancel. Now, if you do the inspection and it does not go well and you do not feel comfortable moving forward, in Minnesota, you can back out with no explanation as long as it's done within your inspection contingency period, and your earnest money would be refunded. Okay, so we've done our inspection. We're super excited. We're moving forward. After that, we're going to let the credit union know, hey, go ahead and order that appraisal. We're moving forward. We're good to go on that. We obviously need that appraisal to come in at your sales price in order to move forward smoothly. If it doesn't, there would be some renegotiations that potentially would have to happen. We haven't seen too many low appraisals lately, so that's good. The appraiser is going to pull comps. They're going to make sure that the home is worth what you're paying for it. So it's kind of a safeguard for you as a buyer to have that done anyways. After that, it's a little bit of a lull in action between, what your realtors, you won't see them. You'll be spending a ton of time with your realtor, and then all of a sudden, boom, you have an offer, the inspection's done, and there's a little bit of a lull between then and your final walkthrough, which we typically do the day before or the day of closing. That's our opportunity to walk through the house to make sure it's in the same condition or in the condition it needs to be in prior to your closing. Um, make sure they didn't take anything they're supposed to leave, make sure nothing was damaged when they moved out, that type of thing. We don't want to do it too early if they haven't moved out yet, simply because if they move, we want to make sure nothing was damaged. But we want to give you enough time to be able to do that prior to closing. All right, the closing process has changed a little bit since COVID. So really it's just you, your closer, which is title, so your title representative or your closer, and your realtor. Sellers will pre-sign and do not attend closing anymore. So the sellers have already pre-signed. It'll be you, 3 parties at the closing table. You'll have seen most, if not all, of your documents prior to closing. So if you have, if we don't have it's closing takes about 45 minutes to an hour at most. You'll have a stack of papers about this thick to sign. So if you haven't seen everything and you know that you want to read everything, please let your agent and your lender and your title company know that you want to read through every document before you sign it. Because when we sit down at closing, you'll get an explanation of the documents that you're signing, but there isn't time to read every single word on that. So that's something important to know, prior to closing, that when you get there, it's not for you to read this book of information. But the title representative will explain all of the documents that you're signing. You'll have seen most of them and signed off on most of them prior anyways. You'll bring your either wire or your cashier's check, your photo ID. You'll go through the documents, and then after that, the house is yours. So we're done. And then final step is to move in. So a couple upfront miscellaneous costs, obviously earnest money. We talked about that. That is given to the listing company within 48 hours of an accepted offer. It goes towards your down payment or cash to close if you're moving forward, refunded if you're not. You'll have inspection is an upfront cost that you will pay. Now, that price will vary depending on the size of the house and what you add on. So I would say maybe a townhome would be in the 350 range with no radon, single family house 500, and then if you add on radon and sewer scope, that will go up. So just kind of budget for that. Know that your inspection is something that you're going to pay for upfront. And then home warranties, you can negotiate a home warranty in the offer. You can negotiate a home warranty post inspection. There's a bunch of different products out there. They're usually going to cover all of the mechanicals, the appliances, some electrical and plumbing coverage. So let's say you found a house that you absolutely love, and this happens quite often where the furnace and the AC are in proper working order. They work well, but maybe they're 18, 19 years old, and the average life expectancy is 20 to 25 years. It's really hard to quantify how you negotiate on something that's working. So a home warranty in that situation might be a great product for you to add on, where it gives you coverage at least for a year. You can extend it after that, but you know that, hey, look, if something goes wrong, I've got this warranty to help me take care of that. Okay, that's all I think I have. Any questions, please type them in here.
Awesome information as usual, Rachel. Every time I hear you, I learn something new.
Thanks.
That absorption rate is crazy, right? Like months for everything on the market to really sell. That's
yes, it's kind of crazy.
yeah, but well, awesome. Well, like I said, we appreciate your time. Thank you so much again for joining us tonight. This does conclude our webinar, and if you have any questions, please go ahead and throw them in the chat or the Q&A box, and Rachel and I will get to it, but we'll probably stay on for another couple of minutes here. And if we don't have any questions, like I said, we'll go ahead and end the webinar, and then you guys can go on with your day. And again, we appreciate your time. So
thank you guys.
Yeah, thank you all for being here. Okay, Rachel, I don't see anything coming through. So
Perfect.
I appreciate your time. Thank you so much again for joining us. And like I said, you do a great job. So we appreciate it.
Thanks so much. Have a good night.
Yeah, have a good night. Okay.
Okay,
Have a good
see
night,
ya.
everyone.